Hey, what's going on, guys? Welcome back to another awesome episode. If you're tuning in for the first time, don't forget to smash the subscribe button. That way it helps spread free education all about investing to everybody around the world. It costs you nothing but means a lot to me. But in today's episode, we're going to be talking about and analyzing one stock in particular. And if you clicked on it because of the title, you probably already know what it is, and that is Alibaba. And the reason why I wanted to analyze this stock in particular is because you guys asked for it in a previous video. So if you have any other stocks you'd like me to analyze, make sure to leave them down in the comment section below. Without any further ado, let's talk about the problems, the achievements, and everything else to do with Alibaba stock. Let's go. All right, welcome back. Long time no see. So as Chinese stocks continue to sell off because a lot of people are considering to take money out of Chinese stocks as a whole, especially big giants such as Alibaba. But Alibaba being one of my favorite stocks since its IPO, it's been a great performer. It has taken a nice little dip from these 310, 320 range levels that we see here on the screen all the way down to below 200. Today it's sitting at 200, but we'll talk about the price a little bit later. Before we get into that, I want to mention, for those people that might not know why this sell-off is happening, well, U.S. lawmakers are threatening to delist firms from American exchanges, Chinese tech firms in particular. And the reason being is, there's a lot of controversy behind the fact that American companies aren't allowed to compete in China, so why should Chinese companies be allowed to compete in the United States? That's kind of the big thing. There's a few other controversies going around, like Chinese law is cracking down on certain companies. So it's kind of the combination of the two that is really stirring the pot. But before we talk about Alibaba, let's talk about the overall Chinese market. As you can see, took a pretty decent hit. The lowest point being July 27th, and now we're in the beginning of August. But you got to think about it like this. The Hang Seng Index, which is the index for Hong Kong, has been as high as 31,000 and took a dive of nearly 25,000 in July. So a pretty nice haircut when you think about it. And now it's kind of slowly climbing back up. And that's kind of what I expected to see, because the news does push stocks lower than what they probably should have gone to, based off of whatever news that they're reporting on, right? If that makes sense. So let's talk about Alibaba specifically and more of the fundamental analysis of Alibaba. And all of this might be old news in the future, or it might still be a relevant topic. Regardless, let's talk about the Alibaba technical and fundamental analysis. So first, the talk of the town is the stock price. Like I said before, it has taken a nice big dip. If you take a look at from the old highs to the lows, it's fallen as much as almost 40%. And actually from the very, very peak of 320 to where it was on the daily just not that long ago, the low price of 186, and actually as low as 179 for that day. So over 40% drop for Alibaba in roughly a little less than a year. Pretty crazy to say the least. So Alibaba, when you look at their financials, and we'll look at this again, I just want you to note something, that this is all in CNY. So everything that you see here, you can times it by 0.15. So everything that's in the billions, hundreds of billions, is most likely in the tens of billions, right? When you convert it back to USD. So that's just something to pay attention to. So when we look at the comparison between Alibaba and Amazon, just remember that. So that way you're not thrown off by the numbers when it comes down to it. So Alibaba executive summary. So it's trading at 28% below our estimated fair value. Earnings are forecast to grow 11% per year, and earnings have grown 29% per year. To give you a nice little visual, here is where their share price is at currently versus their fair value. As you can see, it's roughly around 30% undervalued for how much they're bringing in. The past performance is also really important to look at. And historically speaking, Alibaba has performed just around 30% year over year. That is nice to see in a company that's, a pretty decent size already. Next, we have a balance sheet, which is again in CNY. So if you wanted to get the conversion for the USD, you would have to do that by timesing any of these numbers by 0.15. So we have long-term and other assets here, physical assets, but visually you can see that their debt is pretty low compared to, their long-term physical assets, cash, receivables, et cetera, et cetera. So all this together is roughly 1.5 trillion CNY. And now that you know the balance sheet, we can comfortably say that, okay, it's not major debt. It has enough money to, be around even if things hit the fan. And even if they were required to pay some kind of fine down the road, maybe some accounting or fraud charges that are being cracked down on Chinese big tech stocks. Again, Alibaba's not a part of that list. So far, we have a few companies that they're targeting. But if Alibaba does end up being on that list, I don't think it's going to be too big of a deal, seeing that they have enough cash on hand to cover something like a fine. But regardless, I hope that doesn't happen. I hope that they have nothing sketchy going on. Otherwise, it would cause some problems for the stock in the short term. So, ownership breakdown. This is something important that I like to look at, but not everyone does. This shows you who owns the actual stock. Right now, public companies own 47%, institutions around 46%, and then individual insiders and private companies own a little tiny fraction of Alibaba stock. Their biggest investor is actually SoftBank Group Corp. So that's another person that you want to see, make sure it doesn't get into any kind of trouble in the short to medium term. SoftBank Group Corp. Not to worry, they're a Japanese company, so not that big of a deal, but just something to be aware of. Next, we have the Alibaba versus Amazon. A lot of people talk about this because Alibaba is kind of like the Chinese version of Amazon. Now, the reason being is it's not just because they sell products and they have a marketplace for selling these products and then they ship them to their consumers. No, the reason being is because they are also a giant conglomerate when it comes to their business model. Now, when you look at Amazon's revenue model, you can see, well, they have 163 billion in online stores, 63 billion in third-party selling services, they have 40 billion Amazon Web Services, and they have other ways of monetizing as well, and they're continuously growing these sectors, right? But for Alibaba, they have a ton as well. I'm not going to read all of these off to you. If you want to take a screenshot and take a look at it later, just know that the most important thing is they are a multi-engine business that is going to continue driving long-term growth. That is the key. Now, this also poses more risk for when you think about, well, what if one of these companies is doing some shady business, right? Then they can get shut down, and that also hurts Alibaba's reputation. Hopefully that doesn't happen, and hopefully Alibaba vets all of their partners just like Amazon does, or just like anyone really should, right? But when it comes to comparing these two companies, Amazon is obviously a lot bigger than Alibaba. Amazon's market cap of 1.5 trillion dwarfs Alibaba's 640 billion. And when you calculate each firm's revenue numbers, the disparity is even greater. Amazon had revenues of 126 billion from last quarter, where Alibaba had 34 billion. But this doesn't tell the entire story. What tells the entire story, we got to ask the question of, can Alibaba surpass Amazon? And despite the success of Amazon, there are still plenty of positive indicators that suggest Alibaba will continue to thrive in Asia and even make a push into the so far untapped foreign markets it needs to take a share of to continue growing. It's worth noting that back in 2012, when Amazon first began its ascent to the heights it has achieved today, its share price was sitting pretty much at exactly where Alibaba's is right now. And could Alibaba make that same ascent, right? And that's what I want to look at now. So the revenue numbers for Alibaba's 2020, 2021, again, if you take these numbers and multiply them by 0.15 to get the USD version, you would be seeing similar figures of what Amazon was having back in 2016, 2015. Obviously, the 2015 doesn't show up here, but that's kind of where they're at right now. Alibaba is around 5 years back where Amazon is today. So that's kind of painting an interesting figure because Alibaba has still plenty of room to grow in the Asian market. Meanwhile, Amazon is pretty established here. Now, they are planning to grow, and they are continuously growing in other parts of the world. So that's not to take away from the fact that Alibaba and Amazon still have a lot of butting heads to do in different markets. And Amazon does have more cash and overall dominance to continuously grow faster than Alibaba. But time will tell. Sometimes the underdog can overcome and become the dominant force in a particular sector if they do the right things. So what do I think about this stock? Where do I like this stock? Well, if you watch my previous video when I was just talking about the actual, what's going on in China and how is Alibaba going to be affected by it, you would know that I like this stock under 200, and I actually picked up a couple shares underneath $200. And as it bounces up until we have a clear confirmation above 210, 211, and possibly even 220, that's when I'll continuously buy more shares. If it doesn't go above that, and if it just bounces off that, I will wait for even a lower low, and hopefully we can even get this down below what we saw earlier, which was around 179, 180, 186 is kind of where I bought it at, but I would like to see it under 180 if I could. That's when I'll start to pick up more shares, but I also would like to pick up shares if it continuously goes up, because it could just bounce off these lows and continuously go up and pass old highs. Now, with what's going on in China, I highly doubt that that will be the case, but it could also be a kangaroo market for the Chinese market for quite some time until things get resolved as well. So just stay tuned. Make sure to subscribe to the channel if you want more updates like this. If you want to talk stocks, make sure to follow me on Instagram as well. It's just happy to be Rue on Instagram or on TikTok as well. I appreciate you guys watching, and hopefully you guys got a lot of value from this video. If you haven't already, smash the like button, subscribe, and I'll see you guys in the next one. Peace out.